Hello traders, welcome to the next World Trading of YouTube channel. So we're going to have a quick review regarding the forecast I shared yesterday. And what we can clearly see, we identified this consolidation zone where we have this accumulation of price delivery here in the daily time frame, and how we can see that price there is not really facing a form of flexibility to have the impulsive bullishness, because we have here the draw on liquidity, which is the weekly bearish fair value gap we identify from the weekly time frame. This is the daily time frame. From the weekly forex forecast, I explain all this perspective we can see here. So we identify the daily bullish fair value gap, and we can see here Monday priced deep into that. So this was the candle delivery on Tuesday. So today being Wednesday, I told us to anticipate more bullishness. So clearly what we can see is that price here created a bullish order block. So I told us to anticipate pullback, and then we have bullish continuation. So let's check the 4-hour time frame. So in the 4-hour time frame, what we can clearly see within the daily bullish fair value gap, we also identify this 4-hour bullish fair value gap. So we can see price deep, taking out sell side liquidity. So we built the structural perspective, and then I told us then, since we've built the structural perspective from the higher time frame to the 1-hour time frame, where we saw the sweep of the sell side liquidity and bullishness, we identified this bullish fair value gap in the 4-hour time frame, and I told us guys to anticipate to see pullback into that fair value gap. Looking at the 1-hour time frame, we also identify a sponsorship zone, and then I told us from there we can anticipate to frame our bullish continuation to the upside. So let's check the 1-hour time frame. So here in the 1-hour time frame, what we can see within the daily bullish fair value gap, we have the 4-hour bullish fair value gap, and within the 4-hour bullish fair value gap, we have this bullish order block here in the 1-hour time frame. Price return taking out sell side, mitigated, push to the upside. Price did not really mitigate the consequent encroachment, and now we can see price dipped lower, taking out the sell side, and we have bullishness. So clearly we can see we have the push of price created this high, fall of price created this low. We have bullishness, break of structure. Price gave us this low point. So I told us to wait to see how price would dip to take out the sell side, and then we frame our bullish push of price to the upside. So clearly, how would you have taken your entry in such price delivery? Here you have the return, price taking out sell side liquidity. Price printed a bearish order block here, but what we can see is that we had impulse to the upside. Volume closed above that. We have a change in state of delivery. In extension, in a lower time frame, you're going to see a market structure shift. What clearly should you anticipate? It's a pullback and then the bullishness. Let's check the 15-minute time frame. And we also trade with a confluence of trading sessions. So you can see within the fair value gap, we identify in the 4-hour time frame the most recent bullish fair value gap. Here in the 15-minute time frame, what you can clearly see is that we have this bullish order block here. So clearly you can see we have the bullish order block here in the 15-minute time frame. And clearly you can see that is what price returned into also, taking out the sell side liquidity we identify from the 4-hour, the 1-hour time frame. And now you can see the mitigation of that. And upon the mitigation of that, what do we see? We have a market structure shift. We have a break of structure here, market structure shift here. Price created sell side liquidity or inducement liquidity. We can see a return. Price took out the sell side, and we have the bullishness to the upside. So clearly looking at session, let's activate that. Let's put on the indicator, the session indicator. So what you can see here, we have the Asia session, and we can see how price gave us bearishness. We're anticipating bullishness. And I taught this in the mentorship program. For you guys in the mentorship program, I taught you guys a lot of things that you need to consider when you're trading the trading sessions. And I gave you guys a lot of schematics to explain that. So clearly here, what we can see is we have the Asia session, and we can see bearishness. So for those in the mentorship, you know what to anticipate for the other trading sessions. So we can see clearly now, since we're expecting a bullish day, then we need to identify a sponsorship zone below the Asia session. So we can see here we have the bullish order block in the 15-minute time frame, which is within the 4-hour time frame fair value gap. So definitely, in the 1-hour time frame, what we're going to see here is the hidden OB, or what Mansouri Sapari called the double marabuzu. And now we can see the fall of price there during the what? The London session. 3 a.m. New York time zone. Price dipped to that. And we had this movement that gave us the market structure shift. So you can see we had bearish during the Asia session, bullish during the London, and bullish more into the New York and also into the New York launch hour. So we are seeing what? Bullishness. This was CPI price delivery. So you can also see how that even the fundamental works with the technical. So we can see we had that impulse, price fell again to the downside, but what price fell to take is the sell side. We have market structure shift, price took out sell side liquidity, inducement liquidity, and we can see bullish continuation to the upside. So you can clearly see what happened in GBPUSD. This is actually the GBPUSD pair. So let's check gold pair in regards to the daily update I gave us last night on what to anticipate to trade today. So in the gold pair, let's get to the daily time frame. So for gold in the daily time frame, you know, clearly I told us we saw price also printing this bullish order block. Price returned to the downside, mitigated this bullish order block. In confluence to that, what you can clearly see is that we have the inversion fair value gap. So we have what? The inversion fair value gap. It's a valid inversion fair value gap because it sponsored the movement that took out the sell side liquidity. We have bullish price return, mitigated that, respected the main threshold, so created this bullish order block. So I told us to anticipate bullishness because we have buy side drawn liquidity. And you know, this was where I told us to trade as the targets when you refine that from the lower time frame. And we can see prices giving us more bullish volume to the upside. So let's check the 4-hour time frame. So clearly in the 4-hour time frame, you know, what we saw yesterday, though I didn't really point this out for you guys yesterday, you know, I was doing a very quick focus yesterday. So we had this bullish fair value gap here in the 4-hour time frame. So you can clearly see how price returned into that, mitigated that today being Wednesday. And we can see the bullishness taking out the what's buy side liquidity. I'm really sorry, the dog is actually barking, so you can bear with me. So let's check the 1-hour time frame. So in the 1-hour time frame, there are a lot of things I put into perspective when I'm conducting my analysis, and all of these are based on the ICT concept also, and how I've back tested the chart and looking at how some of these things occur. So what we can see here is that we had this bullish fair value gap. Price created this bullish order block, but then this failed to continue bullish to the upside. Price violated that and fell. Now what we can see in confluence of that is this bullish fair value gap, which we identify from the 4-hour time frame. So clearly now what we can see is that price dipped into that fair value gap, respected this bullish order block that failed to further sponsor bullishness to the upside after the mitigation of this bullish fair value gap. So we can see how price dipped into that, and we can see bullishness to the upside. What you can see, let's get to the 15-minute time frame. So these are based on the session. So we can see that we have the Asia session. We just had a consolidation here. We just had price accumulation. So from the 4-hour time frame, we've identified the bullish fair value gap. So that is our zone to look forward to. So it means that all this accumulation we're seeing here, we're expecting to see the manipulation to the downside to take out all of the sell side liquidity. And we have the bullishness. And clearly we can see price deep into that, taking out all the sell side liquidity. So we have the accumulation here, we have the manipulation to the downside, and we have the distribution. So this is just a very quick review. If you're interested in our mentorship program, then you can do well to check the comment section so that you can have a panoramic perspective to this trading concept. You can be trained to understand how to interpret price delivery so that you can be able to trade yourself and not necessarily have to depend on signal providers. So cheers guys, and God bless you all.